So, you're running a business in New Zealand. Awesome. But one of the first big questions that pops up is always about GST. Do you need to register? Do you have to? Well, we're going to clear up all that confusion for you right now.
This is the big one, isn't it? Figuring out if you need to register for GST can feel a little intimidating, but honestly, the rules are way more straightforward than you might think. We're going to break it all down so you can make the right call for your business with zero stress.
All right, let's dive right in. Okay, before we get into the who, what, and when of registering, let's just make sure we're all on the same page. What exactly is this 15% tax we call GST? Think of it like this. When your business is GST registered, you basically become a tax collector for the government. You add 15% to the price of whatever you sell. But, and this is the good part, you also get to claim back the 15% GST you paid on your business expenses. The difference between what you've collected and what you've paid is what you then send to Inland Revenue. Now for the main event, do you actually have to register? Let's run through a super simple 2-question checklist to figure it out. First question. It uses a bit of official jargon here, taxable activity. It sounds complicated, but I promise it's not. So what does it actually mean? In plain English, if you're doing something regularly to make money by selling goods or services, that's a taxable activity. It's what makes your venture a business, not just a casual hobby or a one-off garage sale. So if you're nodding along thinking, yup, that's me, then here's the second and most important question. It's all about your income. Now, the key word here is turnover. That's your total sales before you take out any expenses. We're not talking about profit. If that number hit more than $60,000 in the last year, or you're pretty sure it will in the coming year, then ding, 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 you've hit the magic number. And it's that simple. If you ticked both those boxes, you have a taxable activity, and your turnover is over 60 grand, then the decision is made for you. Registration isn't optional, it's mandatory. But there is one other situation where you have to register, no matter what your income is. This one is really, really important. Let's say your turnover is only, $40,000. So you're well under the limit. But maybe you've already started adding a line for GST on your invoices. The moment you start charging GST, you've crossed a line. You are legally required to register with the IRD. You just can't collect a tax on behalf of the government if you're not officially signed up to do it. It's a non-negotiable. Okay, so what if your turnover is under that $60,000 threshold? In that case, you don't have to register, but you still can. This is called voluntary registration, and you'll want to weigh up the pros and cons carefully. So why would you? Well, the biggest carrot is being able to claim back that 15% GST on all your business buys. We're talking laptops, tools, software, that big fancy coffee machine for the office, all of it. This is a huge deal, especially if you have big startup costs. Plus, being GST registered can make your business look a bit more established, and it forces you into the good habit of keeping your books tidy. But of course, there's the other side of the coin. You have to add 15% to your prices, which might make you less competitive, especially if your customers are just the general public. And you're signing up for some admin work. You've got to file those returns regularly and pay on time. Otherwise, you'll get hit with penalties. All right, let's say you've made the call. You're going to register. Well, before you even think about logging into the IRD website, stop. There are 2 really important choices you need to make first. Your first decision is about your accounting basis. The payments basis is super simple. You only worry about GST on money that has actually come into or gone out of your bank account. It's a total game changer for managing your cash flow. The invoice basis is different. You have to account for GST as soon as an invoice is sent or received, even if you haven't been paid yet. And listen up, because this is crucial. If you don't actively choose one, the IRD will automatically put you on the invoice basis. And honestly, it's pretty clear which one most small businesses prefer. Just look at the numbers. The vast majority of businesses opt for the payments basis. Why? Because linking your GST to your actual cash in the bank just makes sense. Your second choice is how often you'll file your GST returns. For most of us, 2 monthly is the standard. It's the default option. If your business is on the smaller side with fewer transactions, you might be able to file every 6 months. And monthly? That's usually just for the really big players or businesses that get regular GST refunds, like exporters. Okay, you've made your 2 big decisions. You know your accounting basis, you know your filing frequency. Now you're ready for the final step, the actual online registration. And the good news is, the process itself is pretty painless.
Just make sure you have your business IRD number, your bank account details, and your turnover info handy. Then you just log into your MyIR account, fill out the form, and this is the best part. In most cases, you'll get your GST number right then and there, instantly.
Now, getting registered is a huge milestone, but it's not the finish line. It's actually the starting gun for a few key ongoing responsibilities you'll need to stay on top of.
From your registration date forward, it really boils down to 4 things. You have to charge GST, you have to file your returns on time, you have to pay what you owe, and you've got to keep good, accurate records to back it all up. It might sound like a lot, but it'll quickly become just another part of your business rhythm.
And that's it. GST registration totally demystified. You now know exactly how to figure out if you need to register, when you need to do it, and what choices you need to make. Taking this step is a huge sign of growth for your business, and now you can tackle it with complete confidence.